They're also saying that in the first half of this year, a weak US dollar under the quantitative easing policy, the QE2, also contributed to pushing up gold prices. That's not all. Even the European Central Bank's decision to raise interest rates added to that trend.
The price of gold has been on a meteoric rise since the end of 2008. Now, when quantitative easing was introduced in November of 2009 and QE2 this year, you already had a market on the rise. So the actual effect of any of the government's quantitative easing programs is really hard to discern. One thing we could look at is the volume. You would expect with the government making cheap money readily available to the market that you'd see a marked increase in volume traded. And if you look at the numbers, you do see an increase in volume, but you have to ask the question, is that due to QE1 or 2? And if we show the volumes against the price chart, you see the volumes rise during the big up moves in the market over the same periods. So my view is that the rise in gold is due more to its growing use as a hedge against all forms of financial risk. It is used in its classic role as a hedge against inflation, but we also hear of it being used as a hedge against deflation. Also, any entity with currency risk is increasing its gold holdings due to hedge that risk. So traders and money managers are adding gold to help balance out any currency risk. And we have seen central banks across Europe and Asia also adding to their gold reserves as sovereign debt issues continue to grace the headlines. Now, because gold has become the de facto hedge for all things financial, it's also avoided the characterization as a bubble. Gold is being bought in most cases as a counterweight to some other form of risk and is not being bought for its own sake. That element has had a huge impact on keeping gold's rise on a very orderly and steady upward trajectory. Now, I see this upward momentum continuing for the foreseeable future.